Well, my name's Tom Bailey. I'm a mortgage lender. I have the privilege of working with these ladies every day. Yeah, to piggyback from what Jolene's saying, I mean, the more proactive and the more, that have the ability to plan ahead will make it smoother throughout the process. So whether you start with her or you start with me and you say, hey, I'm thinking of buying a house next year, in a few months, whenever that time is, we can sit down and say, well, if you're looking, at a range of 100,000, 120,000, whatever that price range is, say, look, this is approximately what you'll need, money in hand, cash in the bank. This is what your monthly payment estimated will be. And so between that, we can find kind of a sweet spot of what we can qualify for, the qualifications that we have to meet. Also, what's comfortable with you monthly payment wise and down payment wise, and just kind of find a happy medium where everything, finds you a spot. So after you figure out the numbers of how much you think you can save and you're comfortable putting down, then the step would be to get pre-approved with your mortgage lender. So a pre-approval is basically just myself or a mortgage lender looking at pay stubs, basically your income of what's coming in versus what's going out, and other payments as far as car payments, credit card payments, anything, child support, anything that may be coming in or going out, and then the money that you're going to have to put down, basically coming up, like I said, with like a ceiling of, we can get you pre-approved for a purchase price of up to 100,000, 150,000, whatever that number may be. And then once you're comfortable, the bank's got you pre-approved, you're comfortable with the numbers, then you're kind of free to shop and do therealtor.com and start looking around with the realtor or online to find the house that's got your office or got your, whatever you may want. And whether you're working with a realtor or whether you're find a house that's for sale by owner, either way, you have an amount that comfortably I can go up to or under, so that's really important when you go out, to not say, hey, fall in love with this house, a big house on Main Street. Well, I can't afford that, or what, or vice versa. So it's better to just be more proactive and plan ahead. The mortgage process basically starts, the initial meetings, can be anywhere from just having a discussion to plan for months or years down the road, or it could be, hey, we're interested in the house, we're ready to get pre-approved and make an offer. So the pre-approval or the mortgage process would start with the pre-approval, then you're making an offer on 123 Main Street or whatever the house is that you like. You're negotiating through a realtor or through yourself if it's for sale by owner. And once you have the signed, executed contracts, sales contracts all signed, you and the seller have come to an agreement on all the details of the sales price and anything that may go along with that, then you're ready to come back to the bank or your mortgage lender and say, hey, I now have a contract, and basically I would transition your pre-approval application into the official mortgage application, and then we're rocking and rolling. We're off to the races through the mortgage process. Which that process, once you have the contract, we have the official application specific to that house and some other preliminary documents that you guys would sign. Then between myself and the realtor, we take care of ordering an appraisal, which is done by a third party, local appraiser in town. There's a handful of them that different banks use, and they go to the house, take pictures, compile, do square footage, do a whole 30 sometimes pages report on the house. They use houses that are similar that have sold recently and come up with a value for the house. And it's just to ensure that to you and to the bank who's loaning you the money that the house is worth basically what you're buying it for. There's also title work. There's other things that are done throughout the process that you really don't even know that's going on most likely. But the appraisal is a big step. Then once the appraisal's in, any other home inspections, you know, some places may require different inspections, termite inspections, home inspections, you know, radons inspections is a big thing now. Some places require them, some don't. It just depends on which bank and which lender you're working with. But once all that stuff's done, then your file goes into underwriting, which everybody loves the underwriter. Those are our favorite people. But they basically look at everything that I've entered, you've given, all the appraisals, everything, and just make sure that it's their job to verify that you guys, everything's qualified, everything meets the qualifications, and everything's as it should be. And once the underwriter reviews things, they may have conditions of, you know, hey, we need updated pay stubs, or we need a new bank statement, or we need whatever. And, you know, so then we get it back to them, get your loan approved, and then usually 30 to 45 days from start to finish, then we're moving to closing. And closing is typically at a title company here in town, and they just, their job is to make sure that the money's transferred properly. They do a background check on the house to make sure that when you buy the house, you're getting it free of issues. There's no back taxes that haven't been paid, or there's no, somebody didn't put a roof on the house and not pay the roofer and he's got a lien slapped. It's their job to ensure that when you buy the house, you're getting the title, you know, free and clear. Trying to think, really, the advice I could give you throughout the process on your side of things would be, you know, be responsive, I guess, to the lender and the realtor, and all, you know, just make yourself available as far as phone calls, texts, emails, whatever. If the lender or the realtor reaches out to you, it's really important to reach out or reach back out and stay involved and stay responsive with them, just so that you know, everybody makes sure that we're on track and meets that deadline. Don't buy any new cars or go to Ashley and spend $6,000 on furniture, and I say all this and people laugh, but it's I mean, every mortgage lender in town has dealt with it, where somebody's gone out and bought something new, because now there's a process where once you start the mortgage process, your credit is kind of monitored on a daily basis. And if you go to Honda and buy a new car and they check your credit, well, it's going to set off bells and whistles in from our back end department. They're going to say, oh my gosh, they went out and bought a new car, it's got a $400 payment, all of a sudden they don't qualify anymore. And nobody wants that. So if you're going to buy anything new, wait till you have the keys, and the day after closing would be good. Current mortgage rates, with everything that's crazy in 2020 right now that's going on, the rates are super low. So you know, that your buying power is a lot more now, just because the 30-year rate is in the mid twos. You know, it's really crazy. And a year from now, what they will be, I wish I knew. I mean, I would have never guessed, as none of us would have, I guess, that you know, what was happening now or what is happening now would be happening. So it's hard to predict where rates are going to go, but I'm assuming they're going to go up. If they go down any more than what they are now, we're all in trouble. But so, you know, that's always something too, to be involved with your lender, because once you get to that process, you can, once you start the loan and they have a rate on the application, That doesn't necessarily mean that's what your rate is until you've said, hey, I want to lock that rate in, you know, and you talk to your lender and they say, okay, I've locked you in at a certain rate. So that's something just to, once again, stay involved and you know, bug your lender and say, hey, what's the rate? Is it locked in? Just, you know, try to stay on top of that kind of stuff. The housing market right now is there's slim pick. I say slim pickings, but it's definitely a seller's market where there's a lot more people trying to buy than there are selling right now. So I had a lady call me today and they put an offer in on a house and it was the first day that it was on the market. So I mean, if there's a house that's attractive and it's a popular one, that's all the more reason to do what we're talking about and have your ducks in a row and be pre-approved. Because if you like a house and then you go talk to the bank and it takes you 2 or 3 days to get your pre-approval letter and make an offer, it could be gone. Yeah, it could be gone. So closing day, the end of the road, I guess, as far as closing on the house is when everybody, buyer, seller, realtors, banker, whoever meets at the title company, and that's when you sign your loan paperwork, the final closing documents. The seller has a few documents it signs too. Most importantly, it's the warranty deed that transfers the title from them to you guys buying. The title company handles all that, records all the paperwork that needs to be recorded, you know, at the courthouse, and makes everything official. It's usually when you get the keys, you ask the sellers any final questions, any quirks on the house, what day's trash pick, you know, any kind of questions that you may have from them. So the last time you'll be able to ask them about, hey, what's this light switch, or whatever, you know, what kind of questions you may have. And that's when you'll need your down payment money. So typically at the beginning, depending on the price and depending on the situation, there's typically earnest money, it's called, which is basically just a good faith down payment that you get credit for. It's not extra money, but it's just a deposit that you give to the seller. $500, $1,000. It's typically $500 is kind of the norm around here. And then the remainder of the money that's needed to complete the whole transaction is due at closing. And depending on the amount, it's either a cashier's check or a wire that is made at that time. So that's when you have to have everything in line for being ready to write that big check. It's fun, but there's a lot of moving parts. I mean, that's the thing, and there's a lot of each process is unique, and there's, you know, different things that can come up, and there's always, you know, it's just best to find a, you know, a lender or a bank or a mortgage company or whatever that you're comfortable with and that you know, can get a hold of, and then we'll call you back, and that, you know, just if some kind of issue arises, you know, it's best to just communicate and work through it. And I mean, realtors and people like myself have been through a million different scenarios. So also, I guess, first time homebuyer grants is something to be aware of. Different banks and different mortgage companies will have different programs, so it wouldn't hurt to, you know, call a few places and find the program that may work best for you. But most of them anymore are income based, so depending on what your total household income is would depend on what program may work best for you. But there's you know, forgivable money where, hey, we give you X amount of dollars as long as you live in the house for 5 years, 10 years, whatever the program is, that money's forgiven. It's hard to explain them all because there's a lot of different, you know, just kind of depends. There again, work with your lender, but it's good to know that those are out there where, hey, you know, it may be possible to buy a $100,000 home with only $2,000 or $3,000 if you're able to, you know, utilize one of these grant programs. And I mean, free money is the best kind of money, I guess. So it's definitely something to have in the back of your mind to ask about wherever you're going to say, hey, is there any first-time homebuyer grants or any kind of grant programs that can help us with the down payment funds. And they change, or they can change every year. So typically the spring is kind of, by April, there should be whatever plans are going to be out for that year will be known. So spring's kind of the busy, I guess, what you would call the busy time for house buying here. Just when the weather starts to get nice, people start getting out and shopping around. So this year is kind of just unique in every situation. I mean, it's just unique, I guess, is the best way. That's a good, politically correct way of saying. But I don't know if you guys don't have any other questions.
I have a quick question.
Yeah.
Can you talk about a realtor's role in all of this and whether it's necessary?
Sure. So realtors are the ones, they will find you houses to look at. So most of them now, especially given the circumstances now, if you call a realtor and say, hey, I'm really interested in looking at this particular house, they're going to say, well, have you talked to your bank? Are you pre-approved? And now more so than ever. And there's some that won't even really talk to you too much until you do get pre-approved. But once you have that, you talk to the bank, you're pre-approved. So realtors, you can say, hey, look, I've talked to my banker and I'm pre-approved to up to $150,000 house. Can you show me some houses in that range from 120 to 100 or whatever that is? And it's their job to kind of take you around, show you however many houses. And it's there's some people that work with a realtor for 18 months before they find a place, or there's some people that may find something in 2 weeks. It just kind of depends. But a realtor will find the house, and they work with the bank, with the lender, and making sure that everything's moving along as it should be. And then they're just to find you that's their job, to find a house. And that's there's 150, 160 realtors in town, so there's plenty to choose from. There's lots of good ones out there. So and you don't necessarily, if the house is listed by a certain realtor, you don't have to use that realtor. You can use, if you know someone or you have one that's recommended to you, you're free to use them for everything. So
Mr. Bailey, can
Yes.
you explain a little bit about what PMI means? Can we see PMI all over the
PMI,
place?
thank you. Yeah, private mortgage insurance is it's a charge, an extra added insurance if you put less than 20% down on a conventional mortgage. Meaning if you buy a $100,000 house and you borrow anything more than $80,000, you're putting less than 20% down. It triggers mortgage insurance, which is basically, there's a couple of different ways to look at it, but it's basically insurance that protects the lender, the bank, or whoever's giving you the money, because your risk or your loan is considered higher risk because you're borrowing more of what the house is worth. Also, it can be sold as it allows you to buy a house with less down and to buy a house sooner and start building equity faster. So I mean, there's different ways that you can look at it, but it's basically, it's a sliding scale, amount of how good your credit is, what percentage you're putting down, where it could be $20 a month, $50 a month, something, depending on what that purchase price is and different factors. But anything over, when you borrow more than 80% of the house's value, will trigger this PMI. And that also, I guess on the monthly payment, when you try to budget on, hey, what am I comfortable, I pay $800 in rent right now. Is that comfortable, or can I go up a little bit from that, or would I like it to be a little bit less? You go on a website and there's a mortgage calculator that says, hey, if I borrow X amount of dollars at this amount for 30 years, my payment's, $400. Well, yes, your principal and interest payment, meaning the money that you're paying to pay back the loan, is that amount. But then you also have homeowners insurance, you may also have PMI, and you also have your property taxes. So we're blessed to live in Illinois where taxes are significant. So that's, something that you definitely want to go and find out if you're interested in a specific house, what the property taxes are for that specific house. Or, you can kind of estimate like 2% of the house's value and use that amount for an annual property tax amount. And basically if you take, and this is also, again, if you're working with your lender, they should be able to they'll factor that into the monthly payment. But I just had it the other day where a lady said, well, I go on your website and I put that amount in and it shows me this, but you said my payment was, $250 more than that. And it was like, well, that's also, I was including taxes, insurance, and your mortgage, so there's more to it. That's, once again, just to ask those questions. That was a good question on the PMI, Mrs. Hattie, I appreciate that. And just to stay informed, ask those questions, and just find yourself a lender that you're comfortable with, and that will get you all the right answers and head you in the right direction, I guess. So, anything else you guys can think of? Loan products, I guess I can touch on that depending on what bank you go to. There's conventional, there's basically in our area, there's 4 different types of loans. Conventional, FHA, rural development, and VA. Conventional are what you think of as just your traditional Fannie Mae loan. I mean, that's kind of if there was a vanilla loan product to think of, that's the conventional loan. Rural development loans, USDA loans, are more designed for rural settings. So in our area, it's anything outside of the city limits of Quincy can qualify you for a rural development loan. There's also income limits, and the big perk of them is they're 100% financing. So if you buy a $100,000 house, you can borrow $100,000 and or more depending on the appraisal, and have very limited cash out of pocket to purchase that. FHA loans are good for, their minimum requirement is 3.5% down, so they allow for a little more cash out of pocket for your down payment. They're a little more lenient credit score wise. Typically 640 and above will get you qualified for an FHA loan. They work basically the same as a conventional loan, just have a little different, they're a little more stricter on the appraisal requirements and different things. VA loans are another 100%, just like the rural development, but they're solely for veterans. So if you're one of the husband or wife is a veteran that qualifies for a VA loan, then that's a good product to look at for that situation.
So with the pre-approval process, if you start with one bank, are you locked into a bank?
No, that's a good question. Absolutely not. No, the credit bureaus have it set up to how it's supposed to work is you have like a 2-week window because every time you go out and check a credit, if you go to Kohl's and get a credit card, if you go to, what stores do we have? Walmart. I was gonna say Bergner's, but we don't have every time you go check Fashion Bug. If you go check every time you go check your credit, if you do a lot of different stores, it can over time ding your score down because it's saying, hey, you've had all these people checking your credit, what's going on, and it can adversely affect your score. But the mortgage process is set up to where you have a 2-week window basically where you can go check different banks and they can check your score, and it should only count as one inquiry. So no, until you are have your loan in process and you've locked a rate in, you're not committed. So, I mean, I always encourage people if they're, shopping around, and people are always usually pretty honest and say, hey, I'm just either calling around to see if I can find the best rate or if I can find the best, because each bank, most of the rates are going to be similar, but there's different charges, there's different things that you want to sit down and look at and just make the best decision for you. But yeah, no, I mean, it would be a good idea to get pre-approved as in many places as you want, just as long as you do it in that window of a couple weeks. It is a good thing. So it's good to compare apples to apples as to find out the best scenario for you, I guess. So good question.
I can
Yeah.
piggyback on that just a little bit.
Uh-huh.
I know that when you do get pre-approved by a bank,
Yes.
your rate and ceiling gets locked in for a while, assuming no major purchases are made or major life changes happen. How long is that? Is that a specific time?
Well, no, that's a good question. So you don't get your rate locked at the pre-approval stage.
Okay.
The pre-approval stage is basically just looking at what current rates are, current income is, current liabilities are, current down payment at that time, and saying, hey, if nothing changes, you're pre-approved for X amount. Now, when you get the contract and you have a executed sales contract on a specific house, and you're moving forward in the actual mortgage process, as soon as you lock, that's when you can lock the rate in. And depending, I mean, it's either 30 to 60 days is what typically I would lock a rate for, depending on, or 45 days, something in that window. Usually it's, I mean, it used to kind of be 30 days was the norm. It's kind of stretched out a little bit, but still at 30 to 45 at the most is typically the start to finish process of when actually you have a signed, agreed upon contract till you are sitting at the table signing the closing documents and getting keys is usually, a month or give or take. So yeah, so you want to make sure, obviously your banker will lock in so that you're locked at least to, or if not a little bit past the closing date, just to ensure if there's something that comes up. So, but yeah, that's a good question. So you're not locked in until till you have a specific house and you're moving forward, and you either get a call from your banker or you call them and say, hey, I what's the rate? I want to look at locking in. So is that
Yeah, that helps. Yeah.
okay? Yeah, nothing's set in stone at the pre-approval stage. It's just basically kind of preliminarily approving you on the way everything is. So yeah.
Now I had another question. I know with most other forms of loans, what we're advised to do is pay more than the minimum to continue to pay it off faster.
Yeah.
And we've been doing a pretty good job doing
Yes.
car and student loans and other credit cards.
Yep.
Does that also
Sick.
apply to the
Yeah.
mortgage?
Yes. Yeah. So all of I guess I shouldn't say all, because I'm sure there's some still out there, but any bank in Quincy really that you're working with a local lender, anything you pay above and beyond the minimum payment will go directly, same as a car loan or credit card or whatever, will go directly to the main principal balance. And most cases say like, hey, if you make an extra payment a year, it'll shave 5 to 7 years off the total life of the loan. So it's definitely a good thing. I mean, it'll cut back the interest, and if you are paying PMI, it gets you to the point where you're not paying PMI anymore faster. So yes, it's a good thing.
An extra 8.5% per payment. Is that right?
You're pretty good. Yeah. Well, so and it's principal and interest payments. So if your payment's $800, but $500 of that is the principal and interest, the actual loan payment. If you pay an extra $500 over the course of the year, then that's and there's, on our website, I can speak for, I know there's others that do too, there's mortgage calculators that you can say, hey, how much, if I pay an extra $50 a month, if I pay an extra whatever amount a month, how fast, or how will that benefit me, and how much faster will they pay? And it'll break it all down for you, and it's a good thing. Yeah, it's actually, even if you round up, I mean, I've had, your payments $680, and you just say, hey, I want to just go ahead and just pay $700 every month. That, every little bit helps. So, yeah. But that's a good question. Yeah, there's no prepayment penalties or anything, so that's always a good thing to pay ahead is a good deal.
Okay.
All right. Well, thank you guys very much, and thanks to the library and all the Facebook world out there. And
Thank you guys for
yeah,
coming.
no problem. You're welcome.
Appreciate it.
Thank you. All right.